Hey guys, wanted to jump on here and talk real quick about the importance of making sure the information on your insurance applications is accurate. Why is that? Here's the deal. If something seems too good to be true, most of the time it is. So we have an account in-house right now. The company does new foundations for housing, right? New residential construction. Most of you guys that are involved in that know that goes to specialty markets. Pretty much anything to do with new residential construction. Well, he sent me a quote from another agent that was local with a standard market company that I knew right away when I saw it, something wasn't right, because this company in no way, shape, or form would touch new residential construction. So I sent it over to my underwriter at that company. Said, hey, so when are you guys doing this? They're like, there's no way we will touch that account. And he went and checked the other agent's work and saw that there were several questions that were falsified on that application to even get the quote. It would have went to review, eventually been canceled for the type of work they were doing, or even if it passed that, a lot of those standard market accounts don't get audited at year end when they renew. So you know when that's going to hit you in the pocketbooks? When something happens and it comes time to use that policy. If God forbid something would have happened, foundation issues, subsidence, any of that would have happened, and it would have come time to file a claim on that policy, guess what? You know what that policy would have paid out? $0. Now, here's the difference in that. That policy that we have them in now, which gives them the coverage for what they're actually doing, in the event that something happens, costs them about $5,000 a year. That quote was $800 a year. As you can see, something's not adding up there. You know why that policy was $800 a year? Because it's not covering what they're actually doing. Would have paid $0 in the event that something happened. And instead of it costing a couple thousand extra a year, could have cost them hundreds of thousands, if not $1 million, in the event that a claim arose and they actually needed to use the policy. Guys, there are no shortcuts in this. Okay? I had this happen somewhat with an account that I brought on 2 years ago. And I'm talking to the business owner about it. And we talked through this to this point, but I was explaining to him that these things were going on and there were undisclosed things in the application, and he responded to me and said, it's called scratching someone's back. Well, that doesn't work in insurance, guys. I mean, it's all cost of doing business and protecting what it is that you're building. And that, quote, back scratch that you're calling it could cost you your livelihood in the event that something happens. And we're talking your business is making $1 million, $2 million, $3 million a year, and we're talking $10,000, $20,000, $30,000 on insurance costs. We're talking 1 to 3% of overhead in a lot of cases to properly cover your business and protect your future and what you're building. So I wanted to come on and talk about the importance of that, because it's scary. It happens every day. Agents will fudge applications just to win business. And guys, it's your livelihood they're putting on the line. So just pay attention to when things are going on. When we do things the right way. We fully disclose operations and the services that you're providing to make sure that the rating is proper, and in the event something happens, you are covered for hundreds of thousands and millions of dollars of damages, not $500 a month that's coming out of the bank. Okay? It's extremely important. So, hope that brought value to somebody. Double check the work that's going on. Again, if something seems too good to be true, it probably is. That's our takeaway today.